Karibu tena to another session of Kurgateri Finance and Accountancy Tutorials. So today we are going to look at a Kasneb examined question that was examined in November 2020, question 3. So in this question, we are being tested on the preparation of final accounts of a sole trader. But here, this question now has got an additional information, just like how I told you before when we were looking at the adjustments of final accounts. So luckily enough, this additional information has got almost everything that we discussed in the adjustment of final accounts, like the issue of accruals and prepayments, the issue of depreciation and provision for bad and doubtful debts. So here, after we are done with this question, I want to believe that there is no question on final accounts that you will not be able to handle in your exam settings. So before we continue, if you are new to the channel, please subscribe, and if you are returning subscriber, welcome so much to this session. So without much ado, let's go straight to question 3 of Kasneb question that is for November 2020, question 3. So this is how it reads: that the following trial balance was extracted from the books of Moses Cavindio as at 31st December 2019. So we have the purchase and sales being 293,500 on the debit side of our purchases, and sales 430,000, and then through to wages of 10,500. So the additional information we are told that depreciation on equipment is to be provided at the rate of 10% on cost. The allowance for doubtful debts is to be increased to 10% of the year-end balance. And then purchase invoices valued at 12 million were discovered in a desk drawer. Half of them have been paid by check, but no record was in the cash book. So the rest are outstanding. Accruals as at 31st December 2019 were as follows. So we had rent accrued of 150, business rates 200, and stationery 16. The prepayments as at 31st December 2019 were as follows too: that the insurance was 150 and advertising were prepaid by 50. So we are required to open a statement of profit and loss for the year ended 31st December 2019, and the statement of financial position is at 31st December 2019. So ladies and gentlemen, I told you when given such a question, it is very much important that you start with the additional information. And starting with the additional information means you start with the workings. Workings are very important and they carry their own marks. So let's start with our workings. Workings. So that working number 1 is on depreciation. Working 1, depreciation. And we had depreciation of equipment. So we had depreciation of equipment. So the depreciation is at the rate of 10% on cost. And I told you that depreciation on costs is the same as straight line method of depreciation. So it is 10% on cost of equipment is 150,000, which is 15,000. So the accounting treatment here will be taking this 15,000 to the income statement as an expense stroke losses, that side of expense and losses. And then at the balance sheet, you are going to add to the existing accumulated depreciation so that you get the total accumulated depreciation, and then you less from the cost of the equipment so that you arrive at the net book value. Then you move to working number 2. Working 2 is on allowance for bad and doubtful debts. So allowance for doubtful debts. So before we calculate for the allowance for doubtful debts, it is important to check from the additional information if we have the bad debts written off outside the trial balance, so that we first of all reduce them from the figure we reduce the figure of bad debts written off from the trade receivables figure or the debtors figure to arrive at the net debtors that we now provide for the doubtful debts. So in this case, we don't have the balance, okay, the bad debts written off outside the trial balance. So you're going to multiply direct. We say that the allowance is 10% of trade debtors. Trade debtors are the same as trade receivables, right? Yes, or the account receivables. So the figure is 5120, which is around 512. And we are told is to be increased at 10%. So let's see if there was an increase. So previously, this is how to check. So previous provision was, you just check from the trial balance. The allowance for doubtful debts were 400, but the current is 512, this one. So you can see we have an increase of 112. So this increase is going to be taken to the income statement as an expense. Okay, under expenses and losses, you take it there because it's an increase. So and then in the balance sheet, this is what you do. You take, okay, from the figure of account receivables or the figure of debtors, you say that figure of debtors, you less the provision of the year, that is 512, you reduce. Are you together? That is what we said when you are discussing about the provision for bad and doubtful debts. So our next working additional information number 3. And we are told that the purchase invoices valued at 12 million were discovered in a desk drawer. Half of them have been paid by check, but no record was in the cash book, so the rest were outstanding. So here you need to understand that you have purchases that valued at 12 million were discovered in the desk drawer, meaning they did not appear in the purchases, the 293,500 purchase figure that is shown in the trial balance. So you're going to adjust. So you're told that half of them were paid by check and there was no record in the cash book. That means the bank balance has not been affected. The bank balance was not affected by the same. And then the rest, the other half the other half is still outstanding, meaning it is still a credit transaction. Are we together? So we are going to open purchases account. Purchases account. And remember this purchase account, since the 12 million was not included, means that you are going to include the whole of 12 million. But to complete the double entry, we are told half of it was paid by check. So we'll have bank account so that to cater for that one because it was not shown in the cash book. And then the other half will be shown under the trade payables or the creditors because it is still outstanding, and outstanding means still a credit transaction, and you show the credit transactions in the accounts payables or in the creditors account, control account, sorry. So you'll have bank account here, bank account, the accounts payables account, accounts payables account. That way. So the balance brought down for purchases, you get it from the trial balance is 293,500, right? And then you are told that the purchase invoice valued at 12 million were discovered in a desk drawer. So meaning the 293 is less 12 million. So you're going to add 12 million. Are we together? So we're going to say but again we are told half of them have been paid by check. Are we together? So half of them have been paid by check. So let us first of all write the figure of bank balance here. So the cash at bank is 32,57. Are we together? So from this balance, we have not reduced half of the purchase figure. We are told that the payment was done for half of the invoices of purchases. So meaning half of 12,000, half of 12 million is 6 million. So you're going to say purchases of 6 million. In this case, 6,000. So to complete the double entry, this is the credit side of the bank account. You bring it to the debit side here and you say bank of 6,000. We are done with that account. But again, we are told that the rest are outstanding. The rest is the other half of 6,000. Meaning, okay, we had the balance brought down of the payables being 3,600. So this figure, we are yet to add the figure of our outstanding purchases, purchase invoices, and the balance was 6,000. So you're going to say purchases to complete the double entry of 6,000. So this is the credit side of accounts payables. It will come to the debit side of the purchases. You say accounts payables of 6,000. And that is what we said, ladies and gentlemen, when we are opening the accounts. So the next step is to close the accounts as such. So the totals of 293,500, 6,000 and the other 6,000 will be 305,500. I want to believe from your calculator you can check. So meaning our balance carried down will be 305,500. Then we have our carry down here of 2743. So meaning our balance carried down, or our balance brought down for our bank is 2743. That is an overdraft. When you see that the balance, okay, we expect a bank account, since it's an asset, to have a debit balance, but at times the owner of the business can overdraw the bank account. So overdrawing the bank account is kind of, you are creating an overdraft. So when you see the bank account having the credit balance, that is an overdraft. The same case applies to this 9,600, meaning our carry down is 9,600 and our brought down will be 9,600. Are we together? So that is how we can adjust the point number 3 of the additional information. Then you have working number 4. Working number 4 was on prepay accruals. So we have rent that is being accrued, rent account, and we have business rates account. Yes, and we also have stationery account. All these are expense accounts, and expenses have got debit balances. So the balance brought down for rent is 5,200. Then for rates, business rates is 2,600, and then for stationery is 986. But here we are told that rent and rates were accrued at 150. Accruals means this figure is less, and we should add these 150 so that to make it's kind of, that is what was incurred. According to accrual basis of accounting, the expenses are recognized when they are incurred and not when they are paid. Paid was 520, but incurred was more than this one. You must add the 150 so that you get the total incurred. So you add accrued on 150, that is for rent. And then for business rates, you add accrued of 200. And then for stationery, you add accrued of 16. Then the next step is to close the accounts the normal way. So our carry down will be here. The totals will be 0, 5, 3, 5. The same, okay, we'll balance with 53.50. 53.50, meaning our carry down, our brought down here will be 53.50. We also do the same on this other side, meaning our carry down is 2800. This side must balance with 2800. So our brought down is 2800. The same case applies to this other one, the stationery. It's 1002, if I'm not wrong. 1002. Our carry down is 1002. Our brought down here is 1002. So that, ladies and gentlemen, that is how to adjust for accruals. So the accounting treatment here will be is that all the accrued figures of 150, 216 will go to the balance sheet as liabilities. Remember, we have not paid, meaning we still have to pay. It's a liability to the business. Are you together? But for the income statement will take the full figures that were really incurred. Our final part of the question that is talking about prepayments. So working number 5 is prepayments. So these were accruals. So let's look now at the prepayments. So the accounts prepaid were insurance, account, and another one was advertising. So their balances brought down again should be on the debit side because they're expenses. For insurance was 550, and then for advertising was 250. And then we are told they were prepaid, meaning they were paid in advance. And according to the accrual basis of accounting, it states that the expenses are recognized when they have been incurred. So we did not incur 550. We incurred a figure less than 550, but what is paid was more than what was incurred. So we're going to reduce this figure so that to find the real figure that was incurred. Are you together? So on reducing this expense account, you must reduce on the credit side. So you say the prepaid figure was 150 for insurance, and then prepaid for advertising was around 50, right? 50. So our next step is to close these accounts. You close the normal way. That is how to close. So this is heavier than the other side. So all sides must balance with 550. So meaning we have our carry down here of around 400. So then we have our brought down here of 400. The same case applies to. So we have 250. So our carry down is 200 and our brought down is 200, right? So that means we are going to take 400 and 200 to the income statement. But for the case of insurance prepaid, you are going to take the figure of 150 as an asset to the balance sheet, and then 50 for advertising expenses as an asset to the balance sheet. So that is how to do the workings. So having that clear working, now you are able to maneuver around the preparation of income statement and the balance sheet comfortably. So ladies and gentlemen, now on the required part, we are required to open a statement of profit and loss for the year ended 31st December 2019 and the statement of financial position. So having clear workings, we can now open these accounts very comfortably. So let's start with the statement of profit and loss. This is Moses Kivindio. Moses Kivindio, profit or loss account. Profit and loss account for the year ended. For the year ended 31st December 2019. That is how to do that. Then we insert our three currency signs and they are in thousands. So our next step is obviously the format of the income statement. The format starts with sales, right? So you say sales. So we normally say sales minus returns on sales. But in this question, I cannot see returns. So since you don't have returns, we are going to take the whole figure to the third column of our currency signs. But if we had the adjustment of sales, that is the returns on sales, we could have done that, adjusting that, okay, the figure of sales on the second column of the currency sign. So we're going to take the sales figure directly to this other side, 430,000. And then since we don't have any other adjustments, we say less cost of sales. Cost of sales starts with the opening stock. Opening stock is the same as the opening inventory. So the opening stock from the trial balance is 6,520. 6,520. And then you are supposed to add purchases. But before we add purchases to the opening stock, we must adjust the purchases. And the adjustments of purchases from the format I took you through earlier, you add carriage inwards. Yes, so those are some of, and also you can list the stock drawings if you have stock drawings in a question or in the additional information. But in our particular question, I can see we had working number 3. So the working number 3, we did the adjustment of purchases. So you can refer the working number 3. So the balance as per the working number 3 was 305. 500. 305, 500. And then these purchases, we are supposed to add the carriage inwards, right? Carriage inwards. So the carriage inwards figure from the question is 2,100. 2,100. And then we are supposed to less closing stock. But from our question, we don't have closing stock. I cannot see closing stock anywhere. So the closing stock, if you want to know, is normally located in the additional information. You cannot find the closing stock in the trial balance. But in this case, I cannot see the closing stock anywhere. So meaning there was no stock that remained to be called the closing stock. 41.20. So this one is cost of goods available for sale. And then these were normally less closing stock, but the closing stock is 0. And then again, ladies and gentlemen, I want to tell you this. We had said earlier when I was introducing the format of the income and the statement of financial position that when you are given wages standing alone in the question, when wages are standalone, then you add to the figure of cost of sales. Yes? But when the wages are combined with salaries, then you take them to less expenses and drawings. Are we together? So here we are going to say add wages. So the wages figure here was 10,500. So and then you take the whole figure on that other side. So the answer is 324,620. So and then you less. The answer is 105,380. So this one is the gross profit. So the gross profit, you add other incomes, right? So that was the formula, that was the format, that you add other incomes. But in this case, we don't have any other incomes. So you're going directly to reducing the expenses. So you're going to say less expenses stroke losses. So ladies and gentlemen, you start here. You go to your workings. The workings are what was directed from the additional information, and then you pick all the expenses there before you proceed to the trial balance and checking for other expenses or losses in the debit side. So from our workings, we had accumulated depreciation. That was working number 1, was depreciation, working number 1, and the figure was 15,000. Our next was insurance. Our next was increase in allowance for bad and doubtful debts, and the increase was 112. And then our next working number 3 was rent account. So this was working number 3. Yes, so we had quite a number of working number 3s because this was dealing with accruals. So the working number 3, we had rent account with a balance of 5350. And then we also had, still on working number 3, we had business rates. Still in working number 3, and the business rates were, you can check from the workings, were 200,800. And then stationery again, still was working number 3, and the figure was 1,002, right? And then we had insurance. Insurance were prepaid, so they are under working number 4, and the insurance were 400, right? 400. And then we had advertising, still on working number 4, and the advertising from our workings were 200. Then we have the bad debts that were written off were 400 from the trial balance. Now we go to the trial balance on the debit side, and then we had postage. Postage is 250. So ladies and gentlemen, I think those were the only expenses we had. So when you add all the expenses, the totals of these are 25,514. 25,514. You can check from your calculator. So when you less the two, you get the net profit. The net profit of 79,866, right? So this one is our net profit. So having the net profit, ladies and gentlemen, we can now proceed to opening of the balance sheet. That is a statement of financial position. Yes, so this one, you start with the non-current assets. So you start with cost, the accumulated depreciation, and the net book values are the resultant, right? So we had one non-current asset, and that one was equipment. And the cost of equipment from our trial balance was 150,000. The accumulated depreciation from the trial balance, you can check the accumulated depreciation is 35,000 for previous years, and then you add the depreciation for this year. You find it in working number 1, and the depreciation was 15,000, if I'm not wrong. So you say 150 minus the totals of these, you get 100,000. So this one will stop, this one doesn't move any longer. Then we move to our current assets. So ladies and gentlemen, I told you, when you come to current assets, please revisit our workings and check for prepaid expenses or accrued incomes. Prepaid expenses are assets, right? So you take them here. So from our workings, from our workings, we had the prepaid insurance. Yes, prepaid insurance of 150 is an asset. We also had the prepaid advertising of 50, that one is an asset. So you write prepaid insurance is an asset. Very important to note that 150. And then you also had prepaid advertising expenses. So this is an expense. So advertising expense, the figure was 50, right? Good. So we don't have any other prepaid expenses, and we don't have accrued incomes. So we go to accounts receivables. We have the debtors of 551.20, but you must less the you must less the provision for bad and doubtful debts for the year, for that period that you calculated. And the provisions was around 10% of 51.20 was 512. So when you less the two, the figure is 4608. Yes. And then we have bank. Just go back to our workings. Our workings, we had an overdraft of the bank account, right? An overdraft is a liability. It will not come to the current assets. So you can be tempted to bring the bank to this side. But if you go by our workings, then you'll realize that this one is a liability because it has a credit balance, right? Yes. So this one will not qualify to the assets. And then we have cash. You can see cash at hand. From the trial balance, we have cash at hand of 120. So ladies and gentlemen, I don't see any other asset here. So we are going to add all these and take them to that side. So 150 plus 50 plus 4608 plus 120 is equivalent to 4928. And then you add. We are going to get the total assets of, so when you add the 200,000 plus 49, you'll get 104,928. Yes, and you remember assets is equivalent to capital plus liabilities. So we are done with the total assets. Now we have to look for the current liabilities, long-term liabilities, and the capital. So let's start with liabilities. You must first of all go through our workings so that we determine which expenses are accrued, which expenses were accrued. So the accrued expenses will come will be the current liabilities, and for prepaid income they will be current liabilities. So you go straight to the additional information, our workings, and collect all the accrued expenses and bring them here. So we had accrued business rates. We had accrued business rates of 150. We had accrued rent. Accrued rent was 200. And we had accrued stationery. Yes, all these were working number 3. So you just confirm and say they are workings number 3. So the stationery was 16. Yes. And then, ladies and gentlemen, we had working number 2, if I'm not wrong, on accounts accounts payable was working number 2, and the figure of payables now turned to be 9,600, right? Yes. And then now we had this bank balance, the bank balance that was an overdraft. So we have bank account, or you can say overdraft. Yes, the overdraft still was under working number 2. The overdraft is 2743. So you can still revisit the accounts from our workings. So ladies and gentlemen, I don't see any other liability. So we add all these, we take to the final column, and the totals are 12,709. So that's a total of current liabilities. We don't have long-term liabilities, I can see. So we move to capital, and capital is the financed by section. So this business of Moses Kivindio is financed by capital. That's he introduced himself of 43,353, and then we less the drawings. Yes, that is the normal format of income statement. You less drawings. So from the question you have drawings of 31,000. Then we are supposed to add the net profit, but if it's a net loss, then you less. So from our income statement here, we had the net profit of 79,866. That is what you take it to this side, 79,866. Okay, so we don't have any other thing that is affecting the financed by section of the balance sheet. So you're going to add, we say 43,353 minus 31, and you add 79,866, 92,219, right? When you add to our current liabilities, then the answer is 104,928. So these are total capital plus liabilities. So ladies and gentlemen, those are the total capital plus liabilities. And what we have done here is that we have satisfied the accounting equation that capital is equal to, assets is equal to capital plus liabilities. The total assets are 104,928. The total liabilities and capital is 104,928. So ladies and gentlemen, that is how to maneuver around a question when given of such kind of a sole trader. So thank you so much, and until next time, it's goodbye for now. Subscribe.